Hi, everybody. Thanks for being here again. This is David Skrika, editor addictedtoprofits.net. This is, again, another one of our series of interviews with small cap opportunities. Today, I have the CEO of Carlyle Commodities. Very easy ticker to remember, CCC on the CSE. He's here to tell you a bit about the deal, tell you a bit about himself, what they're looking to do going forward. So let's just get right into it here, and let's talk a bit about, maybe start off. I always like to get the CEOs to talk a little bit about the background, so people know a bit about them. What brought you to this deal, and then maybe talk about what's going on right now in terms of your drilling and outlook.
Perfect. Yeah, thanks, Dave. Appreciate you taking the time to have me on today. My name is Morgan Good.
Feel free to also share the screen, show us any decks you have, any of the information on the company when you see fit.
Sounds great. Thanks for having me. My name is Morgan Good. I'm the CEO of Carlyle Commodities. As he said, triple C on the CSE, and our OTCQB ticker is DLRYF. My background is about 20 years in the capital markets. Born and raised in Vancouver, British Columbia, which is obviously a big venture capital junior mining hub of the world. Came from a stock brokerage family. Many uncles and relatives worked as brokers and traders for much of my youth. So I spent the first 10 or 12 years working in investor relations and corporate development for various public companies, and then merged my way over the last 7 or 8 years into building shell companies, assisting companies going public, building teams, finding undervalued assets, and bringing the entrepreneurs around those assets to finance them, grow them, and develop them, and create opportunities in the junior capital markets.
Yeah, and so a little bit about Carlyle. I guess I'll start to kind of intro you here, just for my readers, because I just want to do this because my readers and listeners know what I like. What I liked about it when I was approached with it was, you guys already have a 43-101 resource, and right, you trade at a discount to your peers. And early on, and I think we are early on in a bull cycle in gold and precious metals, I always like those companies that are kind of like the quote unquote low hanging fruit, that have the resource and then can build it up and expand it, because you're not just starting from the first inning. You guys are already in the fourth or fifth inning. So in my opinion is, and you can agree or disagree with me, but those kind of companies, especially early in the cycle, tend to really outperform, because usually early in the cycle their asset is undervalued, and then they go from being undervalued to fairly valued, plus can expand the resource, plus hopefully the price of the underlying metal goes up.
Exactly. No, you nailed it right on the head. So I'm just going to quickly share my screen so I can walk you guys through and give you a little better of a picture of what we're doing here. Carlyle, can you see everything okay?
Yeah, everything looks fantastic. Yeah.
So it's really simple. You nailed it right on the head. We're extremely undervalued, and we're sort of in the first half of the game here. When we bought the Newton Gold project, the Newton Gold Silver project, it had already had a significant amount of work done on the asset. More than $25 million was spent drilling the project, and north of 35,000 total meters of drilling, most of which happened sort of between 2009 2012, which gave the project a significant resource already. We actually updated and brought the resource up to brand new 2022 compliant standards last year. So now, as you can see here, we have a 43-101 inferred resource of just under 900,000 ounces of gold at 0.63 grams per ton, and a little under 5 million ounces of silver at 3.43 grams per ton silver. The project's located in central BC, south central BC, and I'll get into that in just a minute or two. And we do have a 5-year notice of work permit, which I think is obviously quite key. The fact that we're able to work this for the next 4.5 years gives us a huge advantage. So brand new resource calculation, significant resource, as well as a 5-year notice of work permit. Just going to jump around.
And what are your plans for like this year in particular? I know you just did a small financing, but like what are you looking to drill this year to prove up? Roughly how much money are you looking to spend on the drill program?
Sure.
Could you just expand on that?
Yeah, so the company was actually restructured late last year, which I think put us into a really unique position. We rolled the stock back at 10 for 1, and Oh, sorry, one sec.
Yeah, because for example, you only have a 3.4 million market cap, or roughly that, at the moment. So that also tells people just how cheap it is.
Yeah, 3.4 million US. So you know, the
US,
stock's trading around 20 cents Canadian. There's only 25 million shares out. So if I just pop back up here, quick snapshot of the cap table, as you can see, just under 25 million shares issued. A recent trading price of sort of 20 to 25, giving it, as you say, a $3.5 million US market cap. We raised a little over $2 million in Q4 of last year, and that was really just to fund the startup of this year's program, which was intended to be 2,000 to 2,500 meters of drilling. And the goal of that first phase of drilling, which we just finished today, if you look at the news wire, you'll see that the company demobilized and completed its first phase of drilling just this past several days. So news went out this morning announcing that. Maybe I can just jump into a little bit more of the proximity here. Obviously we're in Canada. This is Vancouver, and this is the province of British Columbia up here to the top right. The project is located only about an 8-hour drive to the north of Vancouver. So a lot of people who look at companies in Western Canada and think of BC, they think of the snowy white mountaintops. They think of the Golden Triangle, which is way up here to the top. And the problem with the Golden Triangle, there's a lot of great projects up there, but you're dealing with about a 6-month workable window from an exploration standpoint. You're in a very mountainous terrain. It's extremely cold, and logistics for getting in and out of there are next to impossible if it isn't summertime. So we're not faced with any of those challenges. We are literally on a flat-lying plateau, drivable from a small town called Williams Lake, which is right here. It's about 7 hours out of Vancouver and another hour and a half to the west, and you're at our project. And you can literally take a pickup truck. The crews were able to drive there every day for every shift, I think, which gives us a huge advantage. I mean, we were just drilling in January and February, which tells you that obviously we can be out there all year round. So that gives us a huge advantage compared to a lot of other peers. Here's a little more of a close snapshot. This is the Newton project down here. And one thing I need to mention is there's a very, very large company called Artemis Gold that hosts a 12 million ounce gold deposit right here, 180 kilometers to the north, which is exactly the same type of sulfide epithermal gold deposit that Newton is. Now, they're obviously a lot more advanced, but I mention this because Artemis is right along the same geological terrain. It's the same age rock. It's the same mineralization type, same alteration, even about the same grade. They're just a lot further advanced. They actually even today announced another $400 million plus financing, which was closed to advance their production. They will be in production in about 12 months. So they're building out the airstrips, bringing all the equipment in. And it's one of the biggest going concerns in a positive sense in North America right now. They've got a market cap of nearly 900 million. And they've got 12 million ounces. We've got 1 million ounces, yet we're trading at such a discount. So I think that's where really the value proposition comes in, where people can look at a comparable. And I just want to say one last thing about that. This is not a closeology play. We're not right next door to them. We're an analog play. It's on the same terrain, same geological trend. And so a lot of people look at us and think, wow, this could be potentially a miniature Blackwater. And
maybe expand a bit on like the discount you have to your peers. I think that's also important because, again, if we are in a bull market and the company can reach fair valuation just based on the resource, but also compare it to its peers, because that's also how you can get multiple expansion or valuation expansion. Well, let's put it this way. Blackwater is trading at nearly $1 billion market cap. We're at a $5 million market cap, and we've got 10%, essentially 10% the size of a gold resource. Now, yes, theirs is a measured and indicated category, so it's got more density of drilling. They've done about 10 times the total amount of drilling. We've had about 35,000 meters of total drilling. They've had over 300,000 meters. We've had 130 drill holes in total. They're somewhere in the 1,100 total hole range. So it really is a metric of 10x. And I think the thing that's out of whack there is, our market cap is even at 10x is a 50 million market cap, which is still significantly at a discount to them. So I think that's a great comparable that people can point to and say there's a huge upside. There's a huge value proposition for Carlyle today. Yeah, and because of the rollback too, that you mentioned earlier, the share structure is quite tight.
Very tight. I mean, we've only got 25 million shares out. So I think it's nice when you have 1 million ounces in the ground, you own it 100%. You know, this is not an option deal. This project is paid for free and clear. It's Carlyle's and nobody can take it away from us, which is great.
Okay, so I know, just kind of like a finish off here. Tell me if anything else you'd like to say.
Yeah.
Yeah.
So basically right here, I want to just get into a couple pieces.
Get a couple slides. Sorry.
Yeah, no, that's okay. This won't take too much longer. I like to keep things concise for your listeners and watchers so they understand it. This is a major IP anomaly that runs about 4 by 2 kilometers. And as you can see down in the bottom right here, all these densely packed black drill holes represent the just under 1 million ounces. There has been plenty of other drilling outside of this is the known resource. It's called a pit constrained resource. As I mentioned last year, we upgraded the resource calculation. Many large gold intercepts running, you know, several hundred meters in length. Here's some of the highlighted ones right from surface. You see 6 meters below surface running 189 meters at 1.5 grams. 456 meters of 0.6 grams, 442 meters of 0.5 gram. These are really lengthy drill holes that intercepted gold. Many of them are outside of the actual pit constrained resource. In other words, the proximity of those holes was not close enough in density to be included in the 1 million ounce resource. So there's a lot of low hanging fruit for us to go drill, to clean in these spaces here, tighten up the resource itself, and actually expand the footprint and grow the resource relatively easily. So it's not rocket science in order to do that. And if I jump ahead really quick here, I'll show you what the pit constraint looks like. This is basically, you know, the hypothetical pit constrained resource right here. There's a whole bunch of low hanging fruit outside of this pit constrained resource where we know there's been gold intercepts and silver intercepts, and we can be drilling outside of this pit constrained resource to add tonnage and add ounces to our current resource with relative ease. If I just quickly show you this cross section here, one really important thing to note is this yellow unit is called a felsic volcanic unit, and that is the type of rock, that is the host rock of nearly all the gold and silver credits historically from all the historical drilling. And that goes the same for the Artemis project, this felsic volcanic host rock. So we believe we have 3 sheets of them here. This is dipping down to the south here, and then we have a second one here. So our first drill program actually tested a 1,000 meter hole that ran all the way down here to 1,001 meters, where the historical drilling more or less stopped sort of between 300 and 400 meters of depth. We wanted to drill the first 400 meters to sort of do our own due diligence, work through that felsic unit. We were successful in doing that, at least from a visual standpoint. And then the remaining 600 meters, the drill stayed in that felsic unit more or less the entire time, right into the end of the hole when we stopped. So we're really excited about this first drill hole. I mean, it's a 1 kilometer in length. If this proves to be somewhat successful, and we should have assays in a couple of weeks' time, we could, in theory, have doubled the depth of the actual pit itself. And so that's a really exciting thing for all of our investors and potential investors to be looking at.
So you're looking at like drilling as deep as like numerous holes as almost at 1 kilometer deep?
Yeah, like the majority of the holes were sort of around the 300 to 400 range.
Okay.
And we wanted to right off the bat prove this thing is much larger and much deeper than anyone knew before. So that's why we tested way to depth. 2 of the holes we did. The first was 1,001. The second hole tested the southern boundary of the resource, which came down about 250 meters. And then the third hole we drilled was about 750 meters. So we have 2 extremely deep holes that tested completely uncharted waters, which could tell us a lot and right off the bat grow the depth and size of this resource to its limits, which I think is really exciting for everybody. Here's a picture just from 3 weeks ago, just showing you these, here's the crews in their pickup trucks driving right up to the drill, right? So there's no helicopters, there's no mountains. You can see here, this is the geography, the topography, flat rolling hills, lakes. This is the logging road right into the property. So I just think it's important to sort of show that for people so that, you know, a lot of people think Western Canada, BC, and they think these mountaintops, they think, oh God, you know, it's really hard to get in there and to work. Well, it's quite the contrary for us. It's kind of a hidden gem in that respect from a technical perspective.
Yeah. And like you noted, you're further south than most of those other similar projects, which makes it easier to get to as well. So,
without question.
And just quickly, could you put up the PowerPoint for 1 second?
Yeah, of course.
I just want to just note something quickly. I just want to note the OTC ticker for the American viewers. Yeah,
right here.
Yeah. They just started trading on OTC. It's DLRYF, so you can see it. And I think you're going to change it. It's going to change at some point. But
yeah,
the day this interview goes out, that's the OTC ticker for America.
Correct. That's the ticker today. But in the coming weeks, we expect to change that to something a little more consistent with CCC. So it's a little easier for people to remember.
Okay. Well, thanks for being here, and we'll do a follow-up, in a few months after, some of the drill results come in.
Great. Thanks for having me, Dave. Really appreciate the time.
And no problem. And thanks for being here. It was great.
Cheers.